Welcome to Dukascopy TV. With this edition, we would like to present you with the February release of the Dukascopy Bank Sentiment Index. Every month, the Dukascopy Research team surveys 30 academic experts from Europe, North America, and Asia Pacific in order to find out what their 6-month and 3-year economic outlooks are for the 3 respective regions. Today on the line to help us analyze the received data is Professor James Morley from University of New South Wales, Australia, who actually took part in the February poll. Professor, thank you for joining us. But before I move to my first question, let us first of all have a look at the gathered data and the compiled mood indicator. The chances of moderate growth for the global economy in the short run have slightly decreased based on the minor deterioration of the sentiment to 0.57. Later on, regarding the 3-year economic outlook, the global economy should still experience an even stronger expansion despite a drop to 0.69 from 0.77. The poll shows that Asia-Pacific, however, is the region to experience the strongest growth in half a year as the index increased to 0.72. But what is interesting to highlight here is that the same relationship does not hold in the longer 3-year term. Over the 17 months since the record began, February is the first month when the sentiment for North America outgrew the 3-year prospects for Asia-Pacific. Professor, what do you think is the reason behind this change in perception of respondents of what region is going to be the most successful in 3 years?
That's a good question. So I think, from my own mind, I wouldn't have thought that the prospects for North America were actually stronger than Asia-Pacific over the 3-year horizon. But I think the change in that direction makes a bit more sense, in the sense that there are a lot more positive numbers coming out for the U.S. economy. Of course, there's the big risk with in terms of the government issues, the budget issues right now. But basically, I think that shift reflects a bit more of a positive outlook for North America. In terms of Asia Pacific, my own take would be still quite a positive outlook. A lot rides on China, but it seems that there things have picked up from looking a little more uncertain about a year ago.
Let us now consider how the overall global economic sentiment progressed over the course of 5 months from October 2012 to February 2013. It seems that the global economic sentiment experienced a significant boost in November. However, after plummeting in December, it bounced back again in January. Professor, how would you explain this volatile movement of the sentiment?
Well, I think it's fairly easy in recent times to relate a lot of these shifts to big political events that have economic consequences. So as things look a little more stable for the euro, then that's a big boost. But then something recent like the Italian election, with all the uncertainty that leads to, what sort of government will be formed if there will be another election, and what the implications for the eurozone in general are, I think lead to these big shifts there and back. And it's similar again for North America. In terms of the U.S. and all of the fiscal problems that they have there, but changes in terms of whether there will be political solutions or not, that leads to this volatility, because really we don't know from one week to the next whether the political solutions will come through.
Finally, each economy goes through certain economic development stages, from initial recovery to early expansion to reaching the peak of economic growth, which is followed by a slowdown, recession, and the last state, a trough. Let us look at what the poll says about the European economic development stage. 9 respondents believe that Europe is in a slowdown stage, and only in 3 years it will manage to resolve the main problems that persist at the moment and begin to recover from the crisis. Professor, Europe has been experiencing economic turmoil since 2008. And if the region starts to recover only in 2016, based on the compiled data, how long do you think the initial recovery stage could last?
Well, this is a really interesting question when we start talking about the stages of an economic cycle and try to compare them to what's happened historically, or even to think about what stages have happened. So, for example, Europe certainly has had a lot of turmoil, but there have been, they've had times you can say they've accelerated where they go through a lot more cycles more frequently. So right after the global financial crisis in Germany there's actually a bit stronger of a recovery than in, say, the U.S., but the Eurozone crisis tosses that into uncertainty, and then other parts of Europe more generally, like the UK or Ireland or Spain or so forth, because of fiscal policy reactions have had ongoing turmoil. So, but if I take this as sort of a bigger, longer-term cycle, if you will, where you sort of a big wave of a broad recovery across all of Europe, if the expectations are that doesn't happen until 2016, I think we can think that those sorts of changes in general have, the length of cycles seem to have increased over time, those longer cycles. So I would expect the initial recovery stage could last, not just 1 year or 2 years, but could be, 3 to 4 years. It does seem, certainly with the global financial crisis, its effects persisting so long. Here we are now in 2013. I think any kind of recovery in Europe could persist a bit longer, so the cycles may indeed have become a bit longer.
Professor Morley, thank you for joining us today and for your expertise on the matter. For everyone else, if you wish to read the full report on the Dukascopy Bank Sentiment Index, simply visit Dukascopy.com and select Sentiment Index under the Market Research Product section. That is all for today. Thank you for tuning in. Goodbye.